Thanks for tuning in to another episode of Around the Coin. Today's guest, John Lunn, the founder CEO of Gr4vy. Gr4vy is headquartered in California, about 50 employees. They've raised $27.5 million as a cloud payment orchestration platform. John, previous to Gr4vy, joined PayPal in 2006. He was employee number 4 in the UK, which is now well over 2,000 employees. He later helped build out PayPal Ventures, raising $350 million and watching thousands of pitch decks and founders, all in payments. John is one of the most knowledgeable people when it comes to the global payments market. We chatted about how the different countries and markets operate, what's going on behind the scenes, and what Gr4vy's plans are for the future. At the end, we touched on a little sci-fi and macro and crypto. So hope you enjoy as much as I did. Here is John Lunn. John, thanks so much for hopping on, man. I'm really excited to chat with you. So maybe we'll just kick it off with a little bit of your background. One thing that stuck out to me, I was really excited to chat with you about, is your experience at PayPal, both being the 4th employee in the UK office, now over 2,000, and then running the PayPal Ventures. I think you did that for about 4 or 5 years prior to starting Gr4vy. What was the escalation process like from 4 to 2000? And then how did you get into PayPal Ventures? Like, why was that a compelling strategic decision for the company?
Yeah, so look, I started before I joined PayPal. I joined a company called CyberSource back in 1997, which is like the first internet payment company, I'd say. So I was kind of right at the edge of the seam there, trying to work out how the hell we're going to all take payments online. And I think that experience from CyberSource and then the startup I did after that, Fastmark, kind of rolled into PayPal. So I ended up at PayPal as, they're basically trying to break into markets outside North America. So they needed someone who got how the whole payments worked and the technology at it. And the other 3 were commercial and I was the technical person. So kind of brought me in to make it real and, signed up the first class customer we ever had outside eBay and took it from then. So it was, totally different when I joined. As I said, there was like pretty small US team, a tiny European international team. And then as we grew, by the time I left, I think there was like 15,000 people. So it was a totally different type of company. And it's, some things are great in big companies but definitely speed is not, you see speed exponentially changing, going opposite as you grow, just decisions get harder. And things just get different. And I think I quickly realized I preferred the smaller, more nimble operation.
Did they quickly move to international expansion? Like how big were they in the States before they moved out to Europe?
I don't know how many people there were, but we were in like one building in a small office. So it was,
it's pretty small.
It was pretty small in total. And I think it was kind of a year or so after eBay bought the company. So there was still a bit of transition going on. Kind of the PayPal mafia kind of already was moving out or had moved out. So it was a changing company, and being part of a big organization like eBay was interesting. I think, where weird decisions were made, like where we put the UK office was based on where sort of CEOs lived, kind of thing. So it was just those small decisions at the beginning make a big difference how a company and where a company grows.
Is that the same headquarters as it is now?
Yeah, it stayed there. Yeah, it's one of the biggest employees in the town now. So
Interesting. And are they now the largest peer-to-peer payments provider across Europe, Asia? Like, what's their general footprint now? I know people refer to them almost ubiquitously when they think of peer-to-peer payments.
Yeah, I don't know the exact numbers. It's been a couple of years since they left, but I know in Europe for sure, in the US, obviously. Along, have Venmo to it to get super big. I think Asia, you've obviously got China that throws everything one way, and India that throws things the other way. And those are traditionally not struck markets. So.
And then when you ran the venture department there, what was the conversation like debating whether or not to do this in the first place? I'm always kind of interested in, like, you see Google Ventures. I don't know if they were the first, but I think of them as one of the most prominent, where it's like bolting a venture arm on the side of a for-profit business, where typically it's been, I think of like Kleiner, Andreessen now, Sequoia, more old school. Like these are just independent funds, independent investors raising money. But now it seems more common that when companies reach, I don't know, 100 million in venture funding, a couple thousand people, they tend to bolt on a venture arm. Is it typically looked at as like R&D for M&A activity, or is it looked at as a revenue line? Like, what are the internal things?
It really depends. So we kind of went through an evolution with PayPal Ventures, but even there's some companies that look at it sort of an R&D type thing. Other companies that look at sort of a default, how they do innovation when they can't innovate. And other companies look at it as a way to actually generate revenue, etc. So I think different motivations. I know when we started PayPal Ventures, myself and Jeremy, we went and talked to every corporate VC we could find in the Bay, and really I tried to learn from them of what they did right, what they did wrong, how they ended up. And we came out very strongly with the view that this was a way to learn about what was going on. Our motivations right at the beginning were not really financial. Obviously, the plan was not to lose money, but the plan was to use this as a way, as really like meeting and financially participating with startups that were going to work with us. And you've got a huge user base that PayPal has, and the marketing teams, et cetera, and that's very attractive to a startup. They get access to all of that, potential. And we wanted to participate in the upside of, as a company came to work with PayPal, the upside for them, we wanted to participate in that as well. And I think we had a very clear division between ventures and M&A. We didn't want to give the impression that if we invested in you, it meant we were going to buy you at some stage, because not for the obvious reasons, actually for the opposite. If you are a great company, we invest in you, but there's not a fit with PayPal's strategy, that basically could indicate to the market that you're not very good. And that wouldn't be fair on the companies who invest in it. So we always had a line between us, like an investment and an M&A were not the same. PayPal did acquire a couple of companies, just as they worked more, the venture investments worked more and more with the PayPal product teams. They realized there was a fit, and then acquisitions happened. But many other companies, worked with PayPal and then went off to be huge, like companies like Plaid, etc. So there are a lot of both sides, and as we evolved, we got very good at it. And I think by at some stage, the returns that we were starting to generate were actually needed to be mentioned to investors as PayPal being a public company. So it changed a bit. And I think towards the end of my time there, when I decided to go off and do Gr4vy, I think motivations were getting a little bit more financial than they had been at the beginning.
Is that part of the reason why you left? Were you feeling bored?
No, No, the reason I left is I enjoy investing. I still do it now, through a couple of funds I LP and advise, but I didn't want to do it full time. I really missed the startup. I wanted to go back and do a startup. And I always had a long-term plan. Like one of the reasons I joined or started the ventures team was I wanted to learn what it felt like sitting on the other side of the table, because I always knew I wanted to do this. So I'd raised money with other companies. I wanted to raise money for this company, but I wanted to do it even better by learning how VCs operated, so I could, do a better job than I had in the past.
Yeah. It's an unusual trajectory for folks to start off early in their career in VC and then flip to do startup founding. I have a friend who, in hindsight says he did it strategically. Who knows whether he just got the job and fell into VC, but he did work in VC for like 7 years and then started a company that's going well now. And I do think you gain a few major advantages, especially when trying to raise money. One is just the oversight to see what the market trends are, to see not only what the opportunities in the market practically are, but what investors tend to be excited about, which are two related, but distinctly different things. And then there's also the actual art of raising money, the network effect that you have from knowing enough people, just how you craft emails, how you build a deck, how you convey the enthusiasm when pitching. And it's like being on the being on the other side when you're trying to do a deal. It's like kind of a secret. It's a hack.
Yeah, I mean, look, I saw thousands of pictures, right?
Yeah.
So, while I was there, so I could see what was working, what wasn't working. I always say, I sat on boards of a lot of different companies, so I could see what works from a board perspective, and really, like, picking a VC or being picked with a VC, it's a two-way thing, right? You're taking money from a firm or an individual at a firm that you're going to be closely associated with for the next 5 to 8 years. So like, it's a bit like a marriage. Like, you're going to be seeing this person all the time. You're going to be going through good times and bad times together. So actually picking the right VC for you is really important. And that was something that became very clear. I wanted to make sure that people we could work together with going forward, however well or badly it went.
Yeah. Yeah. This is just your general disposition is something I can tell that you've been through this enough times to have the attitude that it's like founder's choice. Because tell me if you disagree, but I feel the first thing an investor thinks of when they get approached is, where's the prize? Like, can this person go and raise money without me, or do they need me? Because many founders you meet will think, I need to raise money. I need to get money in the bank account. We're running out of money. Or even get the better side of this would be, we have an opportunity to grow. We need money. And we just got to talk to enough investors and convince one of them, hopefully, that they'll give us money. And then the experienced founders, like, I got to go around and decide who I want to take money from. And it's a higher level of self-respect and self-appreciation on the founder's behalf, which is, it's not intuitive, because you need money to operate. And if you don't get it, you die. And these guys sitting in these big, tables at these fancy VC firms have the money. You got to convince them, but it's like, it's not how it is. They have to deploy that capital. It's like part of their job to deploy it. So it's a partnership. Very much as and you've got to view it as a partnership, because, once you've got the money, that's great. But then after that, picking a VC is actually going to help you beyond money is hugely important. Like, they often say it's like really lonely to be a CEO, because it is. Like, you're supposed to talk to, right, understand what's going on. You can talk to the people who work with you, but you're still the boss, right? So you're still the person who's got to, show the positivity and make those decisions. And then, when I was going through the venture stuff, I spoke to loads of CEOs who just wanted someone to talk to. They really wanted to, like, I have this idea, I have this problem. And like, that's why some of these summits or conferences where it's just like the founders, the CEOs are so important, because there's so many therapies that should spread. It's like, this happened, is this normal? And you get that also from a very good VC, and especially a VC who's done it before themselves. So they've been part of a startup, or they've been involved with a startup. They've, seen these problems, they've seen what works, what doesn't work, and being able to have that conversation is really, really valuable. So how many different concepts did you iterate through when you were going through kind of the tail end of your experience at PayPal Ventures? Did you, maybe a better way to ask this, what was the process for identifying the business model? Were you writing things down on the board, iterating through customer calls or research, or did you just like lightning strikes and this is it?
Yeah, look, I've been doing payments, as I said before, since 1997. So like, it was, for me, this whole company was born out of pure frustration. I just started getting annoyed with how slowly things were moving. And so it was a case of like, what is broken? Like, how is this so hard? Why is it so hard for like a merchant or a retailer to go and add a payment type? Why is it taking 8 months? Why is like some of these new cool bits of payment functionality never get deployed in the wild? And it's just like, fintech's moving at this speed, and the people who need to adopt it are moving at fintech are probably moving at half the speed, and that doesn't make sense. So that was where I first did. And I just said, look, I'm going to go and talk to some people about what's going on here. Why is this happening the way it's happening? Where's the problem, frankly? And the problem is the payments team. And that's what we saw very clearly. It's not the individuals. They're lovely. They're fantastic people. It's the fact that every retailer merchant in the world has a payments team, and they have it because you start and you do an integration to Stripe or something similar. And 6 months later, you go and add PayPal, and then you go and add a firm, and then you go international. And 99% of merchants are doing this by basically plugging more and more stuff in and adding people to that team. And it just grows and grows and grows. And I talked to some really large, retailers now, with teams of 300 engineers working on payments. And I'm like, the crazy thing here is they're all building the same thing. They're essentially all building a big router, as it was kind of used then, but really now is known as payment orchestration, that routes payments where they need to route them based on the criteria that their business needs. And so I saw this gap. I'm like, let's just build that. Let's build that tool that does that thing. And then let's not become a payment processor and let's start doing any of that. Let's build a tool. Let's give that tool to retailers and allow them to just move quicker, because that will be good for pretty much the whole ecosystem, but also everybody needs it.
So when you define this concept of the payments orchestration, what are the boundary conditions? Where are the endpoints? If I'm a team of 200 people, if a payments team of 200 people at a company, what are the endpoints in which the orchestration is occurring? Do you have the end bank account of the company, which money's being deposited in? And then is it just all the API endpoints of all the Stripe, Braintree?
So think about something like an integration there. So the payment orchestration is a broad church nowadays, right? So lots of people say they do payment orchestration. I think you can sort of, everybody did cloud before, right? Just become a term. But I think for us, we view ourselves as an integration layer and a logic layer that sits above all of the payment companies that you want to work with. So we connect to 100 plus unique payment types around the world. And payment companies like Braintrees and the Stripes and the Adyen's, but also the cool stuff. So we do some of the crypto stuff. We do weird and wonderful wallets around the world. We do open banking, real-time payment type stuff, etc. So that's out the back. And what we've done is we give the merchant a tool, and that tool allows them to, and plugs into their checkout if they want to, and basically allows that merchant to go and add a new payment type. A product manager or a finance person can go into our no-code middleware, add a new payment type, click, go, press deploy, and it's live. And it updates the front end, the back end, the middleware, it standardizes the reports across all the different payment types. And it really allows them to experiment on. And this is there, crypto is a great example. I've spoken to hundreds of merchants who say, look, I'd love to see what happened if we, allow Bitcoin on our website, but I can't afford 8 months of engineering roadmap just in case. When no one uses it or the volume's tiny, I can't afford to do that. With us, literally, they can go in, click a few buttons and be live in 5 minutes. If it gets adoption, great. If they decide this ain't working, 3 clicks and it's off again. So there's that. It just frees people up to experiment. It frees the ecosystem up to try new things and do different things. And for me, that was one of the prime motivations to get this up is let's get things moving. Let's get things moving. And I think, and then many, lots of people have talked about underserved over the years and getting, people who aren't necessarily got credit, et cetera, to be served in their sort of financial ecosystem. But it just struck me during COVID while I was dreaming this up that, I'm at home or stuck in my apartment, ordering stuff online, but what would my life be like if I hadn't got a credit card, if I hadn't got a way to buy it? I would have sucked even more than a nut, right? I would have had to go out. I would have had to go stores. I would have had to, deal with the day-to-day stuff that I certainly didn't feel safe doing. And I was lucky enough to have good credit rating and all that kind of stuff. And there's a lot of people that don't. So freeing it up, allowing this innovation, allowing people to pay in different ways is good. Not only for the ecosystem, it's actually probably good for people generally.
Yeah, interesting. And does it technically work where you're the end, Gr4vy will be the integrator of, say, Stripe, Braintree, all the payment gateways, and then the customer or the merchant doesn't actually touch any of those. They just touch you guys, and then you'll route out payments to all the different.
Yeah. So technically it's exactly how it works. We don't touch the money. So they still need a contract with their gateways. The money ultimately flows into the gateway and then into the merchant's own bank account. So we don't want to get involved in the actual movement of money. Many reasons for that, but having set up a number of startups before, KYC compliance, all of that is a very human resourceful part of a business and not much fun. So by not touching the money and having the merchants negotiate their own contract, we can move quicker and we can sign at any retailer anywhere in the world. But secondly, like a large enterprise retailer is generally who we work with is going to get a much better rate than I am from any PSV or bank they get.
And so would it be technically it's like a widget they're installing into their WordPress, Webflow, whatever website framework they're using, and then you're integrating with the payment gateway that they choose? Is that?
It's a little bit more complex than that in that we're actually, yes, to say it, but we're actually a cloud company. So we're not just a widget that plugs in a SaaS. We actually spin up infrastructure for each of our retailers in a single tenancy mode. So for example, retailer A wants to spin up, to use Gr4vy, we'll spin up an instance of Gr4vy for them, in their local environment, in their local, wherever they're hosting. We'll spin up Gr4vy for them, that single tenancy. They're not sharing that with any other merchant. The data sticks within, their ecosystem. There's no data sharing. We're very specific on how we built this. It can be as redundant or as not redundant as they want it to be. They can load balance. They can do all of that with Gr4vy. So we look a little bit more like a sort of an AWS or a Google Cloud than we do a payment company in that way. And that once that's spun out, the merchant has access to the widgets that they can install on their website. But also it's able to link into that backend systems, whatever they're using for reporting or into a CRM or whatever they want to do there. So it's really is designed for the sort of mid-sized to large enterprise who's got more complex systems.
Yeah. Those things you mentioned are certainly not like scaling up cloud instances, CDN layers. I would imagine that's really going to be kind of an optimization layer that you're not going to face unless you're is it revenue over 100 million? Like, how do you think of
about 50 million and above? I would say that's kind of where we're kicking. Like my view is if you're, selling cheese in Wisconsin to people in America, like Stripe's great,
right?
Country's great,
right?
You don't really need orchestration. I think when you get bigger, that's when you start thinking about redundancy, multiple PSPs, but actually more importantly, it's when you start thinking about international. And things just instantly get more complicated with international. Like I could probably think of 30 or 40 conversations I had with large US retailers say, oh, we're going to launch in Germany. And I'm like, okay, what payment types are you saying? Oh, credit cards. I'm like, you do know that 5% of Germans own credit cards, right?
Wow.
And it's like a tiny proportion. And so a lot of times a retailer will say, oh, we're going to launch international and just assume everybody pays the same way. They don't. They frankly don't. Try and get a credit card in France, your credit limit is tiny because that's how French credit cards work. So people pay in different ways in different markets.
Do the market variance, is it by region, by country kind of? Do you see
It's pretty much down to country. Like you would have thought Europe would all be the same.
Yeah.
No, it really isn't. Like the UK looks a lot more like the US, except now they have open banking. And then as soon as you get to France, Germany, etc., it's very, very different, how people like to pay and what they pay with.
What are the factors that play into with the different methods that people like to pay with? Like, does it ultimately flow upstream to regulation in some way or culture somehow? Like, why would Germany have such low credit card usage? That's surprising me.
After the wars, Germany had a very strong aversion to credit because of the downturn that happened. So, and it's still semi-cultural in Germany that you don't borrow money. So it's, I think a lot of it came from that. And a lot of it comes from technology. I mean, they just had better banking systems, right? That allow real-time movement. So people have been paying with their bank account in Germany ever since I started in this business. And they would prefer do that than use a credit card. Like they would prefer just do a direct bank transfer and pay for an item. And it's the same in a number of different European countries. And and a number of countries that started a bit later, they just developed a local wallet that everybody just uses. So it's partly cultural, it's partly evolution. And, in France, there's regulation around how much money you can borrow on a credit card, etc. So it's different things in different countries, but when you look at it, Europe's pretty complex. Go to Asia and it goes through the window, right? Like the hundreds of wallets, hundreds of banking payment systems. And it's very complicated for a retailer who wants to sell a product into a market they're not in. They really need to be accepting local payment types. Otherwise they're restricting who can buy from them.
Do you think this is a pendulum swing? In other words, do you think we've moved to this hyper complex multivariate payment method globally, where right now I was looking at some numbers the other day on the number of people per week that are coming online is like in the millions. So still there's just an absolutely explosive growth, especially with Starlink and people working from home, cryptos, obviously like default remote first, global first. Is this going to swing to a point where people across the world kind of say, well, it would be advantageous for us to move to one, maybe two payment methods. And there's kind of liquidity is much stronger. Like there tends to be a global reserve currency for a reason. We're not using 1,000 different currencies. International trade tends to happen on USD. Crypto seems to present an opportunity where you could consolidate payment methods, yet it has yet to really take off. Do you see that as happening? Like I can't see it as sustainable when all of Asia uses thousands of different or hundreds of different payment methods, yet we're all on the same internet working for the same companies.
I think things will consolidate a little bit, but I don't think that much. And actually, if you look at it, it's increasingly just getting more complicated. So, as better ways to pay appear or different ways to pay appear, you look at the rise of buy now, pay later, right? It was non-existent outside kind of Australia and probably some parts of LATAM. And suddenly there's hundreds of companies doing buy now, pay later in different ways and different things. So I think technology has just allowed people to experiment a bit more with how they want to do things. I don't think that's going to change. I mean, you go to India now, you don't carry card around with you. You carry your cell phone and you scan QR codes. That's how people pay in India. You go to Scandinavia and you don't take any cash out. You're never going to need it. No one even extends cash. Like things have got to a point where it's just different in different markets, and paying locally and paying internationally might be two different things. And you've got to remember that we're kind of privileged because we get to travel, right? Lots of people don't. So why would you need a international payment type if you're not going to ever use it? So I think you will still, the card companies are not going anywhere, right? And they're going to innovate and grow and change and do all the stuff they need to do. But at the moment, look, people love to bash the credit card companies. It's like an old system that still works super well, like 99.999% of the time. And if you got a card in your wallet, you've got a good chance of paying wherever you are. But when I go and shop online, if there is a Google Pay or a PayPal, I will always see that. It's just quicker, simpler, and easier for me.
Yeah. Do you think, it sounds like you're pretty bullish on the continual dominance of Visa, MasterCard. Is that?
I don't know if it's dominance. You can already see it's shrinking, right? And it's working around debit. I don't think it's going anywhere. I just think there will be alternatives. So
yeah. Do you see alternatives being decentralized as the primary competitive threat?
Not primary. I think probably the primary competitive threat at the moment is real-time payments and open banking. I think like the ability to move money instantly for your bank account to someone you're buying stuff from is pretty disruptive. It's been happening in some places in Europe for a while. I've seen like in the UK, it's starting to get really good adoption because they've cracked the user experience a lot better than it was. It was just extremely painful before. And now it's down to literally fingerprint on your phone and off you go. That kind of checkout is great, and it's pretty secure and it's a lot cheaper. So you're starting to see retailers realize that it's going to work well for them. And if they do it right, which is the biggest conversation I have with a lot of our retailers, like, yes, you're going to save money on perhaps a credit card processing fee, but don't just keep it all, because you also have to take part in trying to persuade people to do this. Like what's in it for the consumer. And so if you start to introduce things to the consumer, like, pay with this payment method and we'll give you, gift card, or we'll give you loyalty points or something like that, then you can start to influence consumer behavior. And I think that will be very disruptive to credit cards generally.
Have you researched much or have any opinions on the trajectory of the credit bureaus? the structure in the United States being kind of an oligopoly of three companies manage all the centralized, super important data, and they were hacked not that long ago. Hundreds of millions, I think, social security numbers leaked on the dark web. I don't know much about how it operates in other countries, but it certainly seems unsustainable, to continue to do it the way it currently exists. Maybe it's not a problem in other places if they don't have a desire for credit, but it seems like one of the most broken parts and under discussed parts in payments.
It's really broken, and it's broken. I mean, look, I immigrated into the US, right? And I came from the UK where, I was doing okay. And I got out here and I went to open a bank account, and then that was hard work. And then once I found someone who'd open a bank account, I tried to get a credit card. And my wife spent the next 6 months laughing at me because the credit card they gave me was the same one she got when she was 16. She's a US citizen. And she's like, I had to give them like $2,000 to get $1,000 credit limit. And I'm like, how does this make sense? And I'm like, why don't you just talk to like the people in the UK? Like I'm in my 40s, like I've got money, like this doesn't make any sense. And they don't talk to each other. Like the US credit agencies don't talk to the UK credit agencies. You don't talk to the Indian credit agencies. So the whole model is very insular and doesn't really take into account the global mobility of people these days. So that's the first side of it. And then the second side of it, I think it's just used for way too much.
Yeah.
Like I think a good example from the insurance world, right? So if you live in a poorer area, you're going to have a higher insurance premium, right? Purely based for car insurance, purely based on your credit rate. But it's been well documented that people who have less money look after their cars much better than people who have more money. So it makes no sense because everybody's like, oh, credit rating. We'll just use that. We use credit rating to work out how much your insurance is going to be. We use credit rating to work out all of this stuff. And it's just overused. And I think it's overused and it's used badly. And it doesn't take into account like how people live their lives now, where they live their lives. And it definitely needs an overhaul. And I think there's some opportunities in that.
Do you think the reason why it's overused is that, to me, two things stand out? One would be that regulatory reasons prevent companies from gathering data that they would be able to use to make more intelligent decisions on pricing. So you have a massive like pricing, like misfire, it's just like off from where it should be. And then the other thing would be the ability for people to contribute to that, to add more data. So like data pipelines aren't built out, or, I tend to think wherever there's opportunity, there's probably people working on it. If not, there's going to be tomorrow. Otherwise, there's some regulatory or some fundamental structural reason why it doesn't exist.
There's lots of people working on that. I mean, there are many people, I think, for a period, before everything that happened, there were people looking at social data as a possibility to use in trying to work people out. Obviously, that didn't go so well. But there are other. I mean, there's companies like Plaid and others in that space who are using banking data to actually start to identify things. There are other companies looking at algorithms on how often you paid, who's paying you, where are your jobs, all that kind of stuff. So I think there's more real time data available. And being able to build that. I mean, the advantage the credit agencies have got is everybody's reporting to them. They're getting all of this data in, and they have, a large quantity of data, however good or bad you think it is. It's a lot of data. And when you have a lot of data, you can make better choices. So I think it's already starting to happen. You're starting to see some pretty cool startups looking at this space and saying, look, there is other data out there that we can use and maybe make better decisions around what we're doing and how we're doing it.
Do you see other countries set up their credit system structurally different than the US, where are they all about the same?
Most have done the same thing. Most have really done this sort of scoring mechanism. I don't have every country I've worked on and anything similar has pretty much the same.
And they're not the same like Experian, Equifax as they are. They are, huh? Interesting. Wow.
Many of them.
Man, it seems like that whole system seems so off balance. Like it is screaming for a better way to do it. Does it have to be centralized? Like, I mean,
well, that's the thing. That's some of the coolest startups are starting to say, look, maybe it's about self-reporting.
Yeah.
Maybe it's about like, maybe you should own your own data, right? So you should be the one who gives access to my employment records. I should be the one like saying, say to my employer, you can give records to this company or import it. And then maybe it should sit on the blockchain. So if it sits on the blockchain, maybe it sits in there where I, as an individual, own the keys. So if someone wants to rate me for an investment, I will give them like a temporary key to access the data on my blockchain for a period of time for this single purpose. You can put it in a smart contract, all the rest of it. So you can go and see it. But ultimately my data sits in the blockchain and is secured and updated and managed by me as an individual. I think a lot of people feel from a privacy perspective, that might be the way forward. So far, not taken off, but logically makes sense.
In 10 years from now, what do you think the largest liquidity global reserve currency will be?
I don't really know. I think we've seen some interesting stable coins coming out from government, and I think we'll probably be one of those.
Yeah.
I don't know if the US won or someone else has won. They've got a bit of catch up to play, but you're starting to see the digital euro. Obviously, China's making big moves with their currencies, their stable coin. So I think we will end up with a stable coin, probably sovereign stable coin,
sovereign stable coin. How much of your attention now is spent on crypto? You mentioned you talked to some merchants who are interested in adopting it. Is it still on the fringe, practically speaking, from a business perspective, or is it like starting to become?
We've integrated into a few different providers to provide, the merchant can switch it on. So, and try it. And really at the moment you see it. I mean, look, I view Bitcoin like gold. I don't think that's anything revolutionary. I don't spend my Bitcoin. I sit on it and pray it's going to go back up again. That's what I do with it. But I don't have any interest in using Bitcoin to buy anything. Generally for me, it's a savings investment. And I think a lot of people view it like that. Is there another currency that, or maybe it sounds like Lightning, that would be more readily used day to day? I think the friction's just a bit high at the moment of loading up your wallet, and even friction's even higher in taking money out of your wallet. So I think at the moment it doesn't really make sense with the way that the cryptocurrencies are set up to be a day-to-day buying. I wouldn't buy my milk with cryptocurrency right now, right? But I think it's close, and I think it will get to a point where it's closer, and it's about user adoption. It's also a bit too complicated for the average date. Like my grandmother, she wouldn't use it. So there's still a bit of a gap to get it into a generally, this is easy for everybody to use, as easy to use as cash, or as easy to use as maybe a debit card. Then I think it starts to get there.
Yeah. I remember when my grandmother would not use the internet. She would just only go in person to the banks, which I think is the only reason the banks even exist in person anymore. What verticals are you seeing the most growth from within the merchant segments? Like what is from behind the scenes? What's working? What are the general trends you're seeing? For growth in merchants? Like, is there certain categories or industries, or I think of like e-commerce, for instance, massively grew during the early part of the pandemic, but I think even now Shopify CEO has publicly admitted a mistake in hiring too many people and then having to lay them off because the retraction back to in-person transactions was higher than they expected. So I'd almost say, yes, that's kind of an interesting trend.
It's always done that though. So it's always like, if you look at e-commerce, it's always gone through bumps. Like everybody likes to do the up and right slide on that, but it's always done like up and down stuff. And I think, everybody was stuck at home. People are now going back to the stores in some case, but I think a lot what COVID has done is a whole generation that was kind of adverse to it. So you talked about your grandmother earlier. So another generation that hadn't tried internet shopping, didn't see any reason to use it, and during COVID had to, and realized it wasn't that bad. So I have sort of older relatives who now they shop online. They never shopped online before COVID, and they're fine with it. They're actually quite happy with it. So I think generally the the people who are shopping online has gone up. I think there's mixtures of people not spending as much money now. Perhaps some people like to go back. It's more that people were buying stuff at home because they had nowhere else to spend their money during COVID. And now restaurants are back open, cinemas are back open, gigs are happening again. Like some of your capital that you were just buying stuff for your house at the time, you're now putting back to things you did before. So I think overall it's still grown and it's still growing. It will still keep on growing. I think you see Europe and North America contracting a little bit on e-commerce, but you look at LATAM and Asia, it's still growing very, very quickly. So I'm still bullish. Like that's where we're going. We'll still keep on going that way. We will keep on going that way. And we just walk down like your local high street or shopping area now, you'll still see loads of stores with the windows closed up, etc. And I don't think they're coming back. I think they're not going to be places you shop. They're going to be much more entertainment.
Yeah. Any particular parts of the world or countries that you feel are on the rise or maybe underappreciated from an economic development perspective? Obviously, China is a major one that people talk about, undisputed growth there. But are there certain parts of, it seems like Asia, Africa, South America are the areas that we're trying to figure out or largely see how they enter the world scene economically?
Yeah, I mean, I like the two that always get ignored are Korea, South Korea. Like everybody always ignores South Korea. It's a huge market. And like, I don't know if
I've been there. Yeah, my wife's Korean. Yeah.
You connect to the internet. You're like, holy crap, that's what the internet to feel like.
Yeah.
It's like incredibly fast, very efficient. Like it's super connected and it's a great market. We always gets ignored. And then like Africa is one of those, like most people don't realize there's 80 million people in Nigeria. It is a huge, huge country of very well educated, good universities, very technical, great engineers with technical skills. And it's a huge, huge market where again gets totally ignored. And I think you'll start to see some of these. I mean, already look at fintech in Nigeria is on.
Yeah, hugely.
And the growth of it there. I think, and Latin.
Yeah.
Of course.
The only reason I know this is my last business we would work with people in Nigeria. Nigeria is 210 million people, or 200. I think by the end of the year, it's which is, to put it in perspective, the United States is what, 330. So they're like pretty close to 2/3 the size of the US, which is insane. And I think it's just a matter of organization, getting basic infrastructure to a point where the average person can contribute to society or gain access to the internet in a peaceful way where they can learn and earn. It's like, it's I just can't think. It feels like a time in history where if you take the number of people coming online, the technological services to work together online, AR, VR, AI, crypto, psychedelics, to sprinkle it all together. And it's like, it just feels like a really special time. Obviously I'm biased, right? We're all biased because we're all just alive now and haven't been before, but I don't know. I just repeatedly get this sense that it's just this, a wild time to be alive.
You just remember that you just look at the growth of it and it's funny, like, the growth of technology. Like I was talking to my grandmother before she died and she's like, this is incredible. Like, she was a physicist, but she was brought up in a house in the UK with 8 brothers and sisters with no electricity and an outdoor toilet. And you think like where she was before she died, she's like on the internet, she's doing all this stuff. And it's still doing that. Like it's just growing and growing and changing. It's funny. Payments were one of the things that never changed, right? Payments, like pretty much until the credit card hadn't changed for hundreds of years. And then the credit card was about it. And then suddenly in the last 20 years, it's gone exponential. Like this, how people pay for stuff went through the roof and playing catch up, I think, really with the rest of technology.
Yeah. Do you think that was some overlook or it would seem that early on in the internet days, like PayPal obviously is the big story, but were payments overlooked for some fundamental reason, or do you think?
I don't know. I'm pretty old. I remember like having my internet through I had to lift the dialer off the phone and plug it into the modem, and you paid through your telephone bill. That's how you paid items. So you never buy anything expensive because it looks like you're going to get a telephone bill. And so absolutely. Like when I started in 1997, you know, people were trying to sell stuff online and had no real way to do it. It was horrible. And we kind of hacked the credit card system and made it work for the internet and all the rest of it. And that's where it started, right? You knew this, the only way it was going to be successful if people could pay for stuff. That was the only way the internet was. It was great as a source of information and all the dream around that. But if this was going to be standard and everybody was going to have the internet at home, it needed to be able to accept that. And we saw that right.
If you weren't working in payments and you had all the money that you could ever want, what would you spend your time doing?
Yeah. So funny enough, I have a degree in marine biology, and I have a love of the sea and everything to do with that. So I'd probably go and do something like it really depresses me how much plastic we're pumping into the ocean and the state of the reefs and all the rest of it. So you know what, if I had as much money as I needed, I would go and work on that nonprofit to try and help the seas get better.
Nice. Well, hey, you're a young guy. Hope Gr4vy pays off and you go do that. Any particular people, books, podcasts, YouTube channels that stand out as places you've been inspired or have learned from over the years?
I read a hell of a lot of sci-fi. It drives my wife mad. Like, why can't you just read something else?
What do you read? What do you like?
But there's a whole group of sort of Manchester-based UK science fiction writers, people like Neil Stevenson and, you know, Ian M. Banks, etc. That kind of started that. So there's kind of space operas, I would call them. So I think The Expanse, but I read those books and nonstop, and I'm always looking for new ones. I've always been very heavily influenced by sci-fi and the ideas in that. And I think that's why I ended up in technology, frankly, because I was trying to work towards a world where, you know, we had flying cars and all that kind of stuff. So that really came from reading sci-fi. I watch it nonstop, and my wife's not sitting next to me and wants to watch something else. I'll be watching sci-fi. I'll be reading sci-fi. It's probably an addiction.
What do you think of Dune?
Oh yeah. It's a
classic,
one of my favorite.
Yeah.
Sorry. I've read it probably 8 or 9.
Yeah.
Whole series. I actually liked the original movie. So yeah, it's good.
8 or 9 times. God, it's a fat book. For people who haven't seen it in person, it's like, I don't know how many pages.
Oh, and then it's the first of many as well.
Yeah.
So
that's awesome. That's fun, man. John, thanks so much, man. This was a really fun time chatting with you, getting to know you, hearing about your progress at Gr4vy. Where are you personally on the internet? Are you actively tweeting or writing anywhere?
I don't write as much as I used to. I've been busy with this startup thing. But yeah, no, you can find me on LinkedIn. You can probably find me, mainly LinkedIn is what I tend to stick to. I do tweet every so often. I just don't have as much time to do that, but come and find me. I like to talk to people about
Sweet. John Lunn. Appreciate it, buddy.
All right. Great. Thanks for your time.